if anyone sees a great trade, let's not avoid, all right? You know, if it's there, you can do it. Did anyone see when the market opened? We saw the bounce right off that level. That is down sloping parallel line. And that PPHM, hope you guys don't mind, I sucked in this little bit. All right, so confirmation. You guys, for the most part, know I talk about this almost on a daily basis. It's something that we've developed, and it seems to tell us when something is for sure broken a key resistance or support level, or if it hasn't confirmed yet, oftentimes we'll see a reversal. And I often talk about how when something doesn't confirm but closes above or below a key support resistance line, it's a way for computer programs to actually whipsaw the little investor in and out of position. So, you know, so let's say you have a double top at 20 bucks, and the candle closes at 20.05 for that day. The average investor is going to look at that and say, oh, it's obviously a breakout. But what will happen is if it does not confirm, it'll reverse oftentimes. And we need to know if it's a confirmed level or not to know whether or not that's valid. Now, if it goes to 20 in the double top and closes above and then confirms, we don't necessarily want to buy. Why? Well, if the stock went from 15 to 20 and confirmed above, well, it's a $5 move. We don't want to chase it. You know, chasing is the worst thing we can do. So what we do is we need to look for that retrace. And retrace is something that I use on head and shoulder patterns. You know, if something's falling, it breaks the neckline of head and shoulders, and it's already, by the time it closes below that neckline of the head and shoulders, it's already down 10% for the day. I'm not going to chase and short it there. What I'll do is I'll wait for the retrace back up to that neckline and then go short. You have a candle that closes above the trend line, but it has a huge long tail there. The next candle closes above the close of that breakout candle, the previous candle, but obviously it doesn't close above the high of that candle. Therefore, you would not look at that as a confirmation move. You would avoid, could it confirm in future candles? Yeah, I mean, technically it could, but you'd have to wait for that to be sure that it is, you know, it's a confirmation level.
It's got a long tail like that, that's at a high failure, right?
Yeah, I mean, absolutely. I mean, you can even make a case that that's a topping tail. If that was occurring at the high of the chart, you might even be looking the opposite way. Well, funny enough, the average person would probably be saying, oh, I'm buying this, and you guys hopefully would be saying, maybe we're short in this. So, and again, that's even, not to get off topic too much, but if that was a topping tail, where would we short? Exactly, it's almost there. So again, if that's at the high of the chart, it would definitely pique my interest for a possible short. All right. Now, confirm to the downside, get your retrace back up to that level. That's actually a shorting level. You should short it right there at that white line. It actually closes above. A lot of people would say, okay, that's a failure, that's something negative, it's going to go higher. Usually after such a big move up at the moment, it'll at least pull back a little bit. And again, shorting at that white trend line is fine, even if you close out of the money a little bit, you should see it move back to the downside.
Just one thing there, if you close it above that the next day, then that's obviously better.
Exactly, like, yep, precisely. So here, let's say on